Well, here at home, obviously, real estate has been a hot topic for quite some time now. It is a pretty key concern for voters as the federal party leaders crisscross the country making all kind of promises on how they can fix the situation. So, obviously, any new data point is of great interest. Today, we got fresh numbers out of Vancouver, and indeed, we are seeing a cooling in terms of the torrid pace of home sales we saw at the peak of the pandemic, but we're seeing something else play out as well. New listings, the availability of homes for sale are falling pretty dramatically. Take a look at this. Listings down almost 31% year over year. This seems to be setting the market up for some tightness that if you're in the market to buy, you might not like in terms of what it could mean for prices. Let's bring in Steve Saretsky, a realtor at Oakland Realty and the author of the Saretsky Report. Steve, always great to talk to you. Obviously, we're not transacting in real estate to the extent we were in the spring, but prices are still a little elevated, and I keep hearing from people that supply is tight. How are you seeing it on the ground in Vancouver?
Yeah, it's we look at sales and they're barely up 3% on a year-over-year basis. They've been sliding every single month since April. But the reality is you kind of have to look at the whole picture and new listings for a lot of the product. I mean, I think we're running at over a decade lows in the number of new listings for the month of August, and that was the same story in July. So what you've kind of seen is I think partially due to the pandemic. I think with the reopening of the economy, we've seen so many people just getting out of the house, going on vacation, realtors taking time off after a crazy 12 months and really just in my opinion, postponing listings. And so we've really seen that in the data. And so, sales have slowed, but I would argue that, sales certainly would have been higher had you had more inventory. I mean, there's still a lot of buyers out there. And so what you're seeing right now is a situation where any sort of listing that comes to market, because there's so few of them coming to market right now, you still get 50 buyers showing up at the open house trying to bid on these houses because there's nothing else coming to market. So I think that the September here moving forward is certainly going to bring some more inventory, some pent-up sellers, I suspect.
And the prices year over year, even for that benchmark average home, across the spectrum of properties, I believe it's up about 13%, $1.17 million. Even as people look to a calmer market in terms of sales, it's a tight market, like you said, and prices are quite elevated. How do those sort of pressures play out, do you think, for the rest of the year?
Yeah, so at the end of the day, you need inventory to build in order to put downwards pressure on prices, right? So, I mean, the last thing that seller is going to do is cut their price until they actually have to. And so right now we're at a situation where you've got inventory running at, again, decade lows. It's going to take some time for new listings. New listings basically have to outpace sales here for 3, 4, 5 months before you get to basically healthy levels of inventory. So, as I look ahead here in September, October, I don't think there's a whole lot of relief in sight for buyers. Again, obviously, as we get further out, and hopefully, if new listings start to outpace sales, you'll start to see some balanced inventory levels, which should help the buyer situation. But it's been a tough 12 months for buyers, and I don't expect that to get any better in the next couple months.
I mean, that's a solution in the short term, right, in terms of supply, that people would actually put their homes up on the market. This is the resale market. I was mentioning before we got into our chat here, of course, we're in the midst of a federal election campaign. All the party leaders are out with their pledges as to what they're going to do to boost supply. As you took a look across the landscape, is anything making sense to you in terms of starting to address this imbalance?
I mean, I think it's just it's such a multifaceted problem, right? I mean, I look at it and say, every single political party is promising, huge amount of housing starts moving forward. But the biggest problem falls in the municipalities level. I mean, if you come here to Vancouver, it still takes 3 years on average to get a condo project just to get it approved. And then, you're another 2.5 years to get it built. So, just from the idea, the conception, it's 5 years plus just to get, a typical condo built. So, the supply picture, I think it's going to be still challenged. I mean, certainly we're building a lot. The level of new homes that are construction is at a record high. So hopefully that starts to help as completions ramp up. But at the end of the day, I don't know, a lot of these federal election promises, I think, are going to be challenged to be met. I think there will be a lot of empty promises, unfortunately.
It's incredible to me that as elevated as prices are, as tight as supply is, that obviously there's still people purchasing real estate. Let's talk about the cost of borrowing. I know it's more complicated than just a low mortgage rate, but at the same time, I can't imagine the market would have unfolded the way it did over the past year if people were paying 7, 6, 8% for a 5-year fixed mortgage.
Yeah, I mean, I think this is really the biggest variable at the end of the day, right? It's like you can keep building more and more supply, but if you're going to give people money for less than 2% when, inflation's running at 3%, people are funneling into real estate. And we're seeing that, at the corporate level, right? And if you go into the US, you can see, companies like BlackRock getting into massive, home ownership programs, competing in the resale market. And we're starting to see a little bit of that here, even in Canada, some companies coming out in the greater Toronto area, right? Buying up single family homes. And so, when everybody's starved for yield and they can go out and borrow at less than 2%, I mean, you get a lot more capital into the housing market. And I think that certainly we're seeing a lot more, property investors, or what we're seeing a big trend is obviously, typically speaking, the average homeowner, what they would typically do is, you got a 2-bedroom condo, you sell that, use the equity, and then you go buy your single family home and you move up the housing ladder. What we see today, especially when you talk to a lot of these mortgage brokers, is you're seeing is people are just opting to refinance the condo they have, use that equity that they've built, and then, opting to keep the condo and then still go out and buy the single family house. So you have a situation where you're creating, because the cost of borrowing is so low and there's really not a whole lot of other places to put your capital to work in this low interest rate environment, you're seeing more property investors, or I like to call it, real estate hoarding.
Real estate hoarding. Okay, obviously that sets us up for challenges going ahead. I know you and I have been talking about this for years. I've been covering this for years for BNN Bloomberg. I simply can't see where this road leads. Do people just start getting priced out of markets? We've had that discussion before. But then you take a look across the country and prices are soaring everywhere. It just sort of seems like a party that doesn't want to end, and maybe we're getting a bit of hangover from it.
Yeah, I mean, I think that we certainly see that in the latest GDP numbers, right? I mean, a little bit of pullback in housing, and all of a sudden, GDP contracts. So it's certainly an economy that's extremely levered to real estate. I don't know how the party ends so long as mortgage rates, hover around 2%. I mean, again, I think the variable, I think what a lot of people would agree on is probably inflation and what central banks are going to do, if it truly is transitory or not. I think what kills the party is ultimately, higher borrowing costs, and right now that's certainly not the picture right now.